What's up, guys? Welcome back to This Just In. Thank you for joining me today. In this video, we're going to take a quick look at a SPAC that just announced its merger. I think this could be really huge and potentially even be the next Uber. So let's not waste any time. Let's jump right in. All right, guys, before we get started today, subscribe to the channel, hit that bell notification so you can stay up to date. I try to post new videos every day with like growth stocks, penny stocks, market news, anything I think can help us grow our portfolios. There's a link down in the description to my Patreon account. Come join the family over there. I'm doing the first 50 patrons for just $1. That's the day one squad right there. I think we've got about 10 spots left. That'll give you access to the private Discord where we talk stocks. You'll get links to 4 different portfolios so you can see exactly what I invest into. And then anytime I buy or sell a stock up to the second I do it, I send that out so you can, follow along with that. And then I've got a price target channel and a watch list channel. So if you want to, help us grow the channel and be in the day one squad and, be a part of the family, we'd love to have you. So, but guys, let's jump in. This is big, guys. This could potentially be the next Uber. Like, I saw this and I was like, holy cow. And I'm super bullish on this. I think this could be huge, especially when you start looking at all the different verticals they've got. They just got back to pre-pandemic, surpassed pre-pandemic, revenue. So guys, this could be cool. Let's take a look. So this is the company right here. This is Grab. This is their website. This is a Southeast Asia company that does ride hailing, groceries, delivery, food delivery. So it's real similar to Uber in the sense as they started as a ride hailing company. Then they went to, food delivery, but then they've also got, financial services, digital wallets, cashless payments, lending, wealth management. So they've got a lot of different verticals that they can grow this business in. Now, I like the fact that they've got all of these different areas because, for example, in 2020, they got hammered on their ride hailing business, but their food delivery business picked up the slack and grew tremendously. So you can come down here and kind of take a look at the different, services they offer. Like I said, food, grocery delivery, express, you can send packages with them, rides, payments, secure and seamless cashless payments online and in store. They even do insurance. So a lot of different, services. You can drive with them and make money just like Uber. They also do merchants. So sell with us, become a Grab merchant partner, increase your reach. Payments with us, simplify transactions with secure Grab Pay, cashless payments. And then they've got, for enterprise, for businesses as well, where you can even run ads with them, do gift cards with them. So very cool company. They are growing like wildfire. They're expanding. I think they're in like 7 or 8 different countries. I think 8 different countries, 400 cities. We'll look at the investor presentation, but that's what we'll do. We'll jump in. We'll take a look at the investor presentation, hit a couple key points, look at the numbers, take a look at the chart, and wrap it up. I wanted to bring this to you to get today, guys. Go and do your own due diligence, but very bullish on it overall. Think it's going to do very well. So if we take a look at the investor presentation here, and I will link this below so you can check it out. This kind of gives you an idea of their app. They are the #1 super app in Southeast Asia. Deliveries, express, mobility, and then their financial services app. It's got a digital wallet and Grab pay card, insurance, invest, loans, and remittance. So they even have investing on their apps, which is crazy. I actually didn't know that. If you take a look here, so in 2020, they did 12.5 billion in gross merchandise value, which is higher than 2019. So they've already exceeded pre-pandemic levels on their gross merchandise value. They did 1.6 billion in adjusted net revenue in 2020. 1.9 billion transactions completed in 2020. That's a lot of different transactions there. They were the #1 delivery, mobility, and financial services by the gross merchandise value in over 400 cities in 8 countries with over 25 million monthly transacting users as of December 2020. That is a big audience there, guys. 5+ million registered drivers as partners with them. That's a lot of people driving for them as well. And then 2 million merchant partners and 2 million plus Grab Kiosk agents as of December 2020. Not quite sure what the Grab Kiosk agents is. I'm going to have to research that for you and, get back to you. If we take a look here, this kind of gives you a breakdown of the different, parts of their business and the type of revenue it did in 2020. So their deliveries business did 5.5 billion in 2020, where their mobility only did 3.2 billion. And then they did 8.9 billion in total payment volume, which is that's quite a bit of payments there. As far as growth goes, look at this growth. They grew at over 200% compounded annual growth rate from 2018 to 2020. That is ginormous growth there. They grew at 37% from 2020 to looks like the end of 2020 on their gross merchandise value, and then over 100% on total payment volume from 2018 to 2020. Very good. Looks like in the second half of 2021, their target EBITDA is going to be break even. An 11% EBITDA percentage of the gross merchandise value in the fourth quarter of 2020, but they're looking at a long-term EBITDA percentage of 30% for the adjusted net revenue, which is great. When you're looking at these different services, financial payments, financial services, the app, all of that is going to have much lower net margins and profit margins than, say the other aspects of the business. So for them to get to 30% long-term EBITDA is great, especially when you're looking out in the next, few years. So if you take a look here, this is one thing that I did like and I wanted to show you real quick. Look at this. So they are number one in mobility, deliveries and financial services in their area, have access to payment licenses in 6 core markets, largest delivery platform, largest last mile transportation network. But check this out here, diversified business model across 8 countries with no single country contributing to greater than 35% adjusted net revenue. So they're diversified enough in enough areas, enough countries that if one country, got shut down or something happened there, it wouldn't just crush their business. I really like the fact that they're spread out like that. They've got a diversified, market because then they can start increasing their penetration in each one of those areas. If we take a look here, this is kind of some numbers here. Again, as you can see here, their top line, their gross merchandise value, exceeded 2019. So they already beat out pre-pandemic levels from 12.2 billion to 12.5 billion. Look at this growth right here, 5.7 to 12.5. And then look at this, they're going to grow at 40% from 2020 to 2023. So jumping it from 12.5 to 16.7, 24.7 billion up to 34.2 billion. As far as adjusted net revenue goes, you can see here from 2018 to 2020, they grew 96% compounded annual growth rate on their adjusted net revenue. They're only going to grow at 42% compounded annual growth rate from 2020 to 2023. But guys, it is way easier to take 4 million to 1.6 billion than it is to take 1.6 billion to 4.5 billion. So, that makes sense why their compounded annual growth rate is going to decrease right there. But even in that sense, a 14, 13% a year gross merchandise value on adjusted net revenue is great when you're operating up in the billions. Real quick here, profitability, you can see here, they were operating in the negative, and then just recently had a small, pretty much break even there, but they are looking to scale that up to 1.7 billion by 2023. And then again, on the adjusted net revenue for the EBITDA, upwards of 5 million by 2023. So there's their mobility segment right here, EBITDA is positive since fourth quarter of 2019. So they're slowly getting all of their different parts of their business to break even. I've seen some analysts say that they don't think they'll get fully break even by 2023. I think Grab's a little bit more bullish and thinks they'll get there a little bit sooner, but we'll just have to wait and see. But, I'm sure, like you guys know, the more that they can invest and grow their verticals and, expand their business, get into more R&D, I would rather see them operate in a little bit of a negative or a little bit of a loss than focus so much on profitability and focus more on getting to the next level with their growth rates. So now let's take a look at the chart. Oh, and by the way, this is Altimeter growth. I don't even think I gave you the ticker. The ticker symbol is AGC. They're the ones that are merging with Grab. Now, there is one thing I do want to say, like with a lot of SPAC mergers, the merger is, there's a lot of unknown, right? The merger could fall through, a lot of things could happen. These guys actually have a contractual agreement with Uber that if they do not go public by 2023, they owe Uber $2 billion. And so I feel like that creates a much more probable merger. Because if they don't merge by 2023, they owe Uber a lot of money. So I do see the merger going through. I do see it, getting voted on, going through just fine. I don't think that there should be a lot of skepticism there, but things happen. But I just wanted to mention that. As you can see here, came out, boom, big pop, ran all the way up, $18, $18.11. Got sold off a little bit here, popped again, sold off, and then yesterday popped like 10%. Looks like it was down at one point today, like almost 5%, but they're starting to climb back up. They're down about 1% today. Guys, overall, this price right here at $15, the downside, obviously for the SPAC is $10. Overall, I think that this is a stock that you buy on the dips, you hold it, and you let them develop as a company into the behemoth that they're going to develop into. They're already a giant in the Southeast Asia market. I don't think they'll ever get as big as Uber. Obviously, Uber is massive in the US. They do have good penetration. They are growing their different areas of business, but overall, this is a stock that I think can give us a great opportunity for those of us that missed out on the Uber run. I missed Uber. I don't even, think I knew about investing in Uber until it was massive. So this is a great opportunity to get into a company that is doing very well, that is in that same type of industry, and put it in your portfolio and let it ride. It will be volatile, obviously, until the merger is finished. Even after that, it could be extremely volatile, but I do see this stock as doing very well over the course of the next 2 to 3 to 5 years as they grow their revenue, reach break even, start becoming more profitable. The other thing is they did a 3-year lockup period. With the SPAC merger. So where a lot of these other instances, they do a 1-year lockup period. At 6 months, they can sell half their shares. At the full year, they can sell all of them. This one's got a 3-year lockup. So you do have some time where, you probably won't see any internal big sell-offs like you've seen in other instances. Now, that's not to say that they won't raise money. They won't issue shares. That happens all the time. It very well could. This is actually set to be one of the biggest U.S. equity deals coming out of Southeast Asia ever. So again, guys, this is very, very cool. I think this stock is awesome. I love the company, love the growth projections, think it's going to do very well. I can't give you a price target on it today, unfortunately. I just don't know quite where it's going to go, but I do see it doing very, very well over the course of the next 2 to 3 years. So that's it for today, guys. I wanted to make the video as short as possible, as quick, as sweet, to the point as I could. This video is for entertainment purposes only. I am not a licensed stockbroker. Always do your own research and due diligence. Don't just take my word for it. If you have any tickers you want me to cover, put it down in the comments. I'll check it out and see what I can do. Also, if you've got a price target on the stock, or if you like the stock, let me know. I'd love to talk with you about it. Come join us at the Patreon. Like the video if you get any value out of it, and I'll see you guys in the next one. Peace.